Hello students, welcome to Avneet Academy. In last video, we have studied the rules of debit and credit, that is modern rules of accounting. Today we will solve one problem on this topic. We'll see how we have to apply all these rules of accounting to this example. Okay, let's start with the first transaction. Rohit started business with cash rupees 5 lakh. Okay, Rohit started business with cash. So what is a cash? Cash is a asset. So what is the rule for asset? Increase in assets is to be debited and decrease in assets is to be credited. So started business with cash means cash comes into the business. The cash balance will increase. So it is a increase in assets. So increase in assets where we have to write on the debit side of the assets account. For that, first we have to prepare the cash account. So I have prepared here cash account. Left side of the account, what it is called? Debit side. Okay, DR. And right side of the account is called credit side. That is CR. Got all of you? I have explained all these things. Left side of the account is called debit side and the abbreviation of debit is DR. And right side of the account is called credit side and the abbreviation of credit is CR. Got all of you? So in first transaction, cash comes into the business. The cash balance will increase. Increase in assets is to be debited. So on debit side, we'll write 5 lakh. Got this? So whatever the amount invested by the owner to start the business, what it is called? It is called capital. So in this first transaction, Rohit has started business with cash of rupees 5 lakh. So we'll consider this 5 lakh as a capital amount. So what is the rule for capital? Increase in capital is to be credited and decrease in capital is to be debited. So here capital amount is increased. So we'll write on the credit side of the capital account amount is 5 lakh. Clear? This is for increase in the assets and this is for increase in capital. Clear this first transaction? Second bit. Opened a bank account with an amount of rupees 4,80,000. Opened a bank account. Bank account, cash at bank is a asset. For that, we have to prepare bank account. So, cash at bank is a asset. So, opened a bank account means cash comes into the business. Here, cash at bank balance will increase. Increase in asset is to be debited. For that, debit side will write amount 4,80,000. Got all of you? Cash at bank is a asset. Increase in assets is to be debited. So I have written 4,80,000 on the debit side of the bank account. So Rohit has 5 lakh rupees cash. Correct? So out of this 5 lakh, he has taken 4,80,000 rupees and from that he has opened a bank account. For that we have passed the entry. So for decrease in the cash balance, for that we have to pass one more entry on this cash account. Okay, he has 5 lakh rupees, correct? From this 5 lakh, he has taken 4,80,000 rupees to open a bank account. It means the cash balance will decrease. So decrease in cash balance, decrease in assets is to be credited. So in cash account, we'll write on credit side 4,80,000 for decrease in the cash balance. Clear? Third one, bought furniture for rupees 60,000 and issued check for the same. Bought furniture. Furniture is a fixed asset. So we'll prepare furniture account. So what is the rule for assets? Increase in assets is to be debited and decrease in assets is to be credited. So furniture comes into the business. So we'll write here, this is this. Okay. On debit side of the furniture, we'll write 60,000. Okay. How he has made the payment? By issuing check. Got all of you? Rohit has purchased the furniture of rupees 60,000. Issued check means he made the payment with check. So made payment in check means the bank balance will decrease. So decrease in assets is to be credited. So here bank balance will decrease by rupees 60,000. Decrease in assets is to be credited. We have to write on the credit side of the bank account 60,000. Clear? If he has paid the cash, if you have given the cash, then cash balance will decrease. But in this third transaction, the payment is made by check. So cash at bank, the bank balance will decrease. Fourth one, goods purchased from Sumit Traders. Goods purchased. Okay, for goods purchased, we have to prepare purchases account, not goods account. For purchasing or for selling the goods, we have to prepare purchases account or sales account. For furniture, for any fixed assets, we have to take the particular name of that assets. For example, in third transaction, bought furniture. So furniture is a fixed asset. So I have written here furniture name. If they have purchased machinery, then I will take machinery account. But for goods, purchasing and selling of goods, we have to write purchases account or sales account in case of goods. So goods purchased from Sumit Traders for rupees 55,000. Okay, for purchasing the goods, I have prepared here purchases account from Sumit Traders. Okay, in fourth transaction, they have not mentioned that the goods is purchased from Sumit Trader for cash. Okay, they have not mentioned for cash. It means that the goods are purchased on credit basis. Okay, if they have not mentioned the okay, if they have not mentioned for cash, then we have to assume that the goods are purchased on credit basis. Again, they have mentioned the name of the creditor, name of the suppliers. So we have to think that the goods are purchased on credit basis. Okay, in this transaction, goods are purchased from the Sumit Trader. So Sumit Trader is a creditor and creditor is a liability. Correct? Creditor is a liability. So first we'll see this purchase account. Purchases is a expenses. Okay, here expenses are made. So increase in expenses is to be debited and decrease in expenses is to be credited. In fourth transaction, goods purchased means expenses made. For that, we'll pass the entry on debit side because here the expenses of the business is increased by rupees 55,000. Okay. From whom they have purchased these goods? Sumit Trader. Sumit Trader is a creditor. So we'll write the name of the creditor. That is Sumit Trader's account. So Sumit Trader is a creditor and increase in liability is to be credited. So we'll write on the credit side of the Sumit Trader account 55,000. Clear? Next is paid rent rupees 2,500 in cash. Paid rent, it is a expenses. For that, we'll prepare expenses account. We'll write the name of that expenses, rent account. Increase in expenses is to be debited. So write here 2,500 on debit side of the rent account. So how this rent is paid? In cash. So here cash balance will decrease, and decrease in assets, decrease in cash balance is to be credited. So in cash account, write transaction number 4. So cash balance is decreased by rupees 2,500. Got all of you all these 5 transactions? See you in my next video.